You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back once again for Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from the optionsinsider.com, as well as from the network upon which so many of you have been binging all week. Hope your trading week is going well. It's another tumultuous one, especially if you're looking to sling a little bit of volatility. Of course, three things to remind you of at the top of the show here. First off, if you're just listening to Vol Views, what are you doing? Check out the full network. Nearly a dozen shows coming at you. B, if you like what you hear, this show, anything else on the network, do throw a like, a comment, a rating, a star, whatever your platform lets you do. These shows are available on just about every platform under the sun these days. So whatever your platform lets you do, if you do it, it does help new people continue to discover the content. Of course, we've been doing this for a long time, but all the algorithms out there tend to favor the newer reviews and things. So if you like what you hear, throw a star, a like, a comment. It does help. And at the end of the day, of course, if you want to graduate to the next level and you don't want your broadcast week to end with Volatility Views, you want to come back for a little bit of unusual activity analysis, or I really should say a lot of unusual activity analysis, then only one place to go, theoptionsinsider.com/pro. Once you're there, that'll also give you access to all of the pro Q&As we've done, including many with our guest joining us today on Volatility Views. So check it out, theoptionsinsider.com/pro. Somewhere around 250 episodes are waiting for you the second you hit that join button. Also, congratulations to our pro member, Wolfpack, who won the October Pro Trading Crate. Get your name in the hat for November, listeners, right now. theoptionsinsider.com/pro is the place to go to learn more as we learn who's joining us on the old Volatility Views program today. First, let's go out to the dark and stormy shores of Maine, where we are joined once again by Mr. Andrew GIOVINAZZI from OptionPit.com. Mr. G, welcome back to the show, sir.
It is good to be here. I don't think I've been on Vol Views in a while, maybe over a month.
You have not been on Vol Views in a while. So in case you've forgotten, this is a program where we talk about volatility in all of its many forms.
Yeah, you're going to have to remind me of what that is. You know what? When the market's volatile, Sebastian loves coming on this show. So we've had plenty to talk about lately, apparently, whatever that volatility thing is.
Apparently. Probably some stuff to talk about today. And joining us today to help us do just that is our old friend, Mr. Scott Nations, the president of Nations Indexes, also the author of one or two or maybe half a dozen volatility and financial-oriented tomes, including the most recent one, The Anxious Investor. Scott, welcome back to Volatility Views, sir.
It's great to be on, but I really haven't been on in a long time.
Yeah, you might take the cake here. You haven't been on this show, I think, since my producers are telling me since July of this year. So it's been a little bit, a lot happening out there. And of course, you have joined us in the Pro Q&A once or twice, I think, since then. But on this show, it's been a little bit, and we have a lot to get to, listeners. So let's do it. It is time for the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show where we break down the week that was and indeed still is from a vol trading and trending and analysis and unusual activity perspective. And a lot to unpack this week here, listeners. Man, this has been just the mother of all vol apocalypses, vol drubbings, call it what you will. They took a lot of juice out of this market this week, listeners. We're going to get to it all. Of course, it was a Fed week, so a lot of folks were pricing in a wee bit of juice, as they are wont to do these days. Whenever Powell and company speak, they tend to maybe shake things up a little bit, so folks were prepared for a little bit of action. And when we got perhaps a more conciliatory tone out of the Fed, they just proceeded to buy every index with both hands and also unload every vol product with their remaining hands and feet and everything else. It's been just an impressive thing to watch. Earlier this week, not too long ago, listeners, we were talking about threatening 4,100 to the dark side, maybe breaking through that. And once we broke through that, who knew? 4,000, and then below that, it was anybody's guess where the next stop would come. And now, as we're coming into this show, after just multiple days of strong rallies post-Powell, not only are we north of 4,100, even 4,200, even 4,300, we're north of 43.5, 43.66 when we kicked off the show here, listeners. S&P up another 48 handles today, or over one, about 1.1%. So just a banger week out here by just about any perspective. The NASDAQ up 1.4%, and the Dow up about 0.85%. So just a lot of green on the screen. Unless you're looking at the vol space, then they came for it this week, listeners. My goodness. What a vol drubbing. It's been a while since we've seen one of these, listeners. VIX cash, when we kicked off the show, was a little bit north of the 15 handle, about a 15.30. That puts it down about exactly 5 points from where it was this time last week. Yes, we were north of 20, just ever so slightly this time last week. All of that's gone now. VVIX, so the vol itself, also lost all of its juice. It's 83, down 32 points from where it was this time last week. Obviously, there's a little bit of fluff built into that calculation, depending on what's going on out there. But intriguing stuff nonetheless. We'll get to more when we get to the vol ETPs. Trust me, listeners. They have been coming for it this week. But Scott, you are our guest, so we will give you pride of place, sir. Certainly a crazy week, as Fed weeks are wont to be these days. What caught your eye with what the Fed said and the market's reaction, and then more importantly, the just absolute vol annihilation we're seeing as a result?
I think the thing that matters is the yield picture. I mean, they are coming to buy all of the fixed income stuff. So the 10-year futures are up more than a point today, and a point in the 10-year futures is a whole lot more important than a point in the S&P or most individual stocks. Up just over a point today. 10-year yield down 14 basis points today. So not that long ago, 10-year yield, we were talking about 5%, and right now it's about 4.5%, just over 4.5%. So I think that's what matters. And the equity markets are all taking their lead from fixed income. And when the yield on the 10-year drops by 50 basis points in such a short period, people are just going to buy the heck out of equities. They're doing that. When they buy the heck out of equities, when everybody can breathe a sigh of relief, then they're going to pummel anything volatility related.
Certainly are seeing quite the pummeling these days. You mentioned the fixed income space. A lot of that, of course, carried on the back of what the Fed is doing to try to tame inflation. We've been hearing a lot, certainly post-RMC, about this notion of, well, twofold notion, really. First off, of the volatility of inflation, which is not a concept we've really discussed that often here on the show in the past, but that is something we're starting to see people bandying about a lot lately. And also this notion that maybe some folks pushing back on what the Fed has always assumed as its baseline, its guideline of the target 2% inflation. A lot of people saying, where does that number come from? Where do they really arrive at that? Is that just some outdated, archaic relic from the past that the Fed clings to really without any data to back it up? So this is the first time I'm really starting to hear a lot of people push back against that as well, which is kind of interesting. I know you, like a lot of people, Scott, have been a little bit skeptical of what the Fed has been up to of late. What are your thoughts there? Are you in that camp that maybe they also need to start revising how they view inflation, and maybe this notion of the volatility of inflation is something they need to consider going forward?
I haven't been second guessing them lately. Now that they're actually raising rates, and nobody likes higher interest rates. Well, maybe a few people do, but not many people like higher interest rates. So I have not been second guessing them since they've been raising rates. I was second guessing them when they weren't raising rates, and they were looking at a gallon of milk and a loaf of bread, and the prices of those things weren't increasing. And I said, those aren't the only measures of inflation. Look at asset prices. When the S&P was to the moon because the Fed funds rate was at 0, that's when I was second guessing them. I think our markets are more or less back to normal. It took 15 years from 2008 to 2023 to get here. But our markets are more or less back to normal, at least the interest rate regime. And that's a great thing. That's a great thing. As my mom likes to say, congratulations, you're normal.
Well, we've all been searching for some normalcy, certainly post-pandemic. So I'm glad to see, Scott, at least you think we are back there. Let's go to the shores of Maine, where I know, Andrew, you've been watching this market quite a bit and maybe celebrating, maybe lamenting this great vol apocalypse as well. Obviously, a crazy, tumultuous week on all fronts, as Scott mentioned, on the fixed income side, on the equity side, certainly on the vol side. What caught your eye out there this week, sir?
Well, did anybody notice the 6% rally this week that I don't think anybody had on their dance card on Monday?
I didn't see that. What are you talking about? What rally, sir?
It does kind of, I remember, just like floor trading, like way back in the, the grand old days. When the tanks roll, the vol gets crushed. And then, everybody was worried about the, Middle East thing not getting any better. But, everybody's like, okay, are they going to go into Gaza? They're going to be a mess. It's going to be a mess. And, it is. But as usual, like the old floor saying, when the tanks roll, the vol goes. And that's what happened. So, and that was the bottom pretty much. As far as I could tell, we had extra, I would say, VIX climb to the 20s on the whole Mideast thing. Is it going to blow? Was it going to get worse? And by the way, it still could get worse. Could all be worse. Who the heck knows what's going to happen? As of right now, does not appear like it, besides a lot of chest thumping and stuff from different parties. But so that was the peak. I mean, you look at a vol chart. If you're going to pull up something, it's going to be straight downhill, or some of the vol indexes, right? There's going to be straight downhill from there. So now we're at a point where I think VIX is probably now fair. 15, about a 15 makes, I think, sense at this level, weekend adjusted. But anyway, that's the at least the look. So we have what I would say the first normal contango we've had in a month. We have VIX back to 15, and we are now below. Basically kind of where all this stuff started. So I think at least from this point of view, we're still back to the I'd say mid-September levels. So it's not. I would say things are not hunky-dory. I believe the extra weight on the market is still the fact that somehow the federal government needs to borrow $700 to $800 billion a quarter to function. At some point, I think that's going to be a problem. And I've said on the show many times, things aren't a problem till they're a problem. and people just ignore it and they go home and they fill up their gas tank and everything's cool, and then all of a sudden they're not. So at some point, I would assume funding this ridiculous spending binge will become a problem, but it ain't today. I will note, though, that we are not at the lows of volatility yet, but we are basically right before like mid-September. I think that wasn't the downgrade. I was trying to think of mid-September what the big thing was. I think it was Treasuries pushing over 5% or yields are getting to 5% or something like that. So that was the last big bout of sadness we have had. So, I mean, from that point of view, I think VIX is coming back, what I would say, to a fair level. We had basically we had a rally in volatility with a very weak sell-off in SPX over the last couple of weeks. And now it's basically reversing course. I mean, VIX literally it's hitting right back on the number that it was. And I'm looking at as of the 21st. So we have what I guess we just call a normal vol curve for the first time in, a month, a solid 6 weeks, it appears.
No, nothing to point out today, too, which makes it doubly remarkable, this rally today, is this is a rally in the teeth of some relatively bad news coming out of Apple. Usually whither goes Apple, there goes the S&P, certainly, and usually carries the entire market with it. So when the Apple is red, still off about 1.5 or nearly a full percent. It was obviously off more earlier in the session. It has been lifted along with the rally for everyone else. But still, on a day when Apple is red, the market managing to rally over 1%. That is certainly nothing to sneeze at out there. So impressive stuff across the board. Let's see if things are impressive out there in the land of the vol surface, listeners. As you might imagine, we were flirting with backward this time last week. That is no longer the case. They have crushed this thing down across the board. If you go all the way out, let's go all the way out to July of next year, listeners. And you know what? You still don't find a 20 handle anymore. So all of that is gone. Last week, you had a 20 handle pretty much across the board. And this week, you can't find a 20 handle. If you go all the way out to July, you're close. You had a 1990. But that's about it for juice out there. So they have obviously taken the wind out of the vol sales across the term structure. The front portion of the term structure getting crushed most aggressively, as you would expect. That no future down about 4 points on the week. So they really took the wind out of the sails there. The D's not far behind it, down about 3.2 points. Scott, I know you like to watch the futures. A lot going on out there on the volatility surface this week. What's catching your eye out there in the VIX futures this week, sir? And quite the drubbing.
Yeah, but that's something you would expect. With the big bounce in the S&P, that's something you would expect. One thing I do want to make a point to mention: the breadth in this market has been horrible this year. We've talked about the Magnificent Seven and all of that, but that's turning around right now, and impressively so. So the S&P equal weight index is up 1.8% today. The cap weighted, the plain vanilla S&P is only up 1%. And thanks to today's performance, the S&P equal weight index is now up for the year. Now, the cap weighted version is still way ahead for the year, but it's good to see that breadth is improving. When you only have 7 or 10 names that are participating in the rally, that's not very good, and is not very healthy. So I think that that's really important. In the vol space, people are just really throwing in the towel on vol. They think that we're done. They think that we're done for the year. It's a little early in November to be doing that, but if you look at the interest in options on VIX, there's some interesting stuff going on, but people have just decided that it's not going below 13, at least before the end of the year, and they don't think it's going to rally very much from here. So I think that it's interesting but premature to believe that we're done with volatility for the year.
Yes, clearly their memory doesn't exist beyond a couple of days here, Scott, to be writing off the rest of the year. We've all seen some quite literal weekend risk recently, so intriguing stuff, intriguing time to be just unloading all the vol, but that's what they're doing out there this week. Mr. Rock Lobster, same question for you, sir. What is catching your eye in the, to put it mildly, much lower vol surface this week, sir?
Well, like I was saying earlier, we have a very regular curve. It is dropping back into what the way I look at it, option pit. We do a little like regression study on it, and basically when VIX expires. So the study is basically when VIX expires, what does the forward vol look like on average? Just kind of an average thing when VIX is 12. So that's kind of the mode number, and when volatility. Essentially, when VIX goes back into like a lower state, like kind of what's the normal looking curve shape? And that basically gives me an idea what like average forward vol is between the terms. And then from there, when the market gets a little bit, jiggy, then all of a sudden the vols start to move around a little bit, and the futures, all the future premiums, they compress, the curve gets flatter, then goes backward. So it gives you an idea of how, let's just call it how excited the curve is based on how the term structure is laying out. And I found it to be a pretty useful tool over the years. And I came up with this just based on observation, just looking at this stupid thing every day for 10 years, full life, right? You got nothing to do in Maine. What do? You stare at VIX futures moving up and down 2 or 3 ticks a day. I have to say, no wonder why I cut wood. I'm losing my mind. Anyway, so right now, everything is not, I would not say normal, but it's getting right back where we're within 15 to 20 cents of what I would call an average value for forward volatility in the S&P 500, like a historical number. The only aberration is December being cheap because of the holiday effect. But other than that, that's normal for this period of time. So, yeah, at least for right now, VIX is heading back toward 15. 30-day realized vol in the SPX is 14.5, which is the highest it's been in a month, I believe. So what's really weird is we have almost had more volatility in the rally than we had in the sell-off with all of the bad Treasury news, the whatever the market got all up in arms over the last month. The volatility on the upside has been harder this week. I mean, steeper than when we were selling off, which is still like bizarre. But I will agree with Scott. Like maybe we're getting back to what I would call like a normal market where, okay, rates have to be high because there could be economic growth. And the one that's going to suffer, besides people buying houses and cars, is Uncle Sam, because they have to pay full pop for interest at this point. So we'll see how it all shakes out. But at least from a volatility point of view, it's the most normal the curve has looked in, like I said, a month. So normal is generally bearish VIX in the short term and bullish SPX. That's what I'm calling.
No, it's not normal. Are the volume numbers we're seeing coming out of the futures in particular. Of course, the numbers coming out this week for October from our friends over there at OCC. We hit on all of them yesterday in the option block. A quick rundown for you here, listeners. October living up to its moniker of Rocktober, looking pretty active, pretty busy out there. Not quite 1 billion contracts going up, but pretty darn close. 988.3 million contracts changing hands in October. So that puts it, to my calculus, about number 3 of all time, so nothing to sneeze at out there. ADV 44.4 million, so also looking pretty robust. Both of those up strong from this time last year, around 8.5%. But the intriguing thing, equity options taking a hit off 9.1%. ETF options looking strong, 25.6%. Henry was talking about that yesterday on the option block. Of course, we all know index options on the back of 0-day. Scott's favorite thing are just blowing it up 32% from this time last year. And the intriguing thing, the thing that caught my eye, and of course germane to this program here today, is the VIX futures volume. Throughout the pandemic period when options were lighting it up and most of these individual segments, equity options, index options, all of them were pretty much lighting it up. The one laggard month after month and year after year was always VIX futures. It couldn't really catch a bid. They were hoping, the launch of some of these ETPs like SVIX and others would really start ginning up that volume again. We didn't really see that. And then looking at October now, we just had a monster month by just about any comparison, up 48.6% from this time a year ago. And again, October, not usually a sleepy time from a volatility perspective, but this year, taking it to the next level. There was 4.3 million futures changing hands last year. This year, 6.4. So it's quite the bonanza out there. Scott, I don't know, have you been watching this kind of drought they've mostly seen in VIX futures? And were you as surprised as I was to see a nearly 50% pop year over year in VIX futures volume last month, sir?
No, I don't think you can be surprised that we had a big increase in VIX futures volume last month. I mean, everybody was terrified. They weren't real well positioned for it. And so if you're kind of behind the curve, if you will, then it's easy to buy VIX futures. In the pit we used to say about being long puts, buy them when you can, not when you have to. And I think people have forgotten that, and they weren't set up for a big interest rate increase, 10-year yield going to 5%, everybody deciding that at the same time that they didn't want to own stocks anymore. Maybe the surprise should be that everybody was so surprised by that.
Yeah, they just got caught flat-footed, maybe hence the surge in VIX futures. We've also been hearing a lot of talk about the zero-day products. Again, your favorites, I know, Scott, in places like the SPX, maybe acting as a surrogate for some of the traditional futures usage. So you might assume that would actually hit the volume numbers, and yet quite the surge out there. I don't know, Mr. Rock Lobster, were you surprised to see a nearly 50% pop in VIX futures volume last month, year over year, sir?
Actually, when you think about it, it does kind of sound surprising, because remember last year around this time, it was kind of a shiitake show. In 2022, right? We were just coming out of the bottom in October into the kind of that rally in November, when things were like, what was Q, like 260 or something like that? I think the IWM is still in the same place, although it is rallying pretty hard today. But I would have thought that big a jump in futures is a little surprising. I mean, at least to me a little bit, because I thought we had some volatility in October and November last year. It was kind of a nasty month in 2022. So it would surprise me that it's up that much, I have to say.
Yeah, especially in light of the growth of all this zero-day fund. I've lost sight of how many people have come on the network over the last 6 months and told me they've found a use case for zero-day that somehow replaces a use case for futures, whether it's intraday swinging or near-dated hedging, whatever the case may be. So you might assume a year ago zero days existed, but they weren't quite to the extent that they are now. So you would assume that might eat into those numbers as well. And yet here we are, 50% nearly year over year. So intriguing, sometimes VIX futures. They could surprise us all sometimes out there, which is intriguing. Let's see if the options can follow suit and surprise us. And, if you were looking for a banger day today, maybe 1 million contracts on the tape already, we're not quite there, but it is certainly a respectable day. 677,000 contracts on the tape. That looks even better when you see that the ADV still robust, but coming in a little bit over the past week. The ADV, 865,000. Again, that's a heck of a lot of VIX paper, but that's down 41,000 from this time last week. When the ADV was threatening 1 million contracts a day, we were saying that's probably unsustainable if past is prologue for VIX options, and that is indeed the case. We are down roughly 100,000 contracts from that level. Again, 865, nothing to sneeze at. A lot of products would kill for that, but for VIX land coming in about 100,000 over the past couple of weeks. And again, almost 700K on the tape today. So it seems like we're going to hit, if not exceed, the ADV today. Let's see what's going on out there from a size position. What's open for size in VIX options right now, listeners? Let's find out together, shall we? With a quick top 10 here. By the way, if you're saying, man, this is the Volmageddon of Volmageddons, this is at least to the downside, not to the upside. The Volapocalypse to the downside. And you might be thinking, okay, this is where we're going to see all the puts making their way back into the top 10. A lot of you have been wringing your hands saying, man, where are the puts? Where are the puts? It's all calls all the time. Well, you might be a little bit happier this week, but not much. There are a whopping 3 puts in our top 10 this week. So if you were looking for 8 or 10 puts. Nope, you're not getting that this week, listeners. Cost you 203,000 contracts to break into the top 10. It's not nothing in VIX at the end of the day. That gets us to our old friends, the D's 25s. Interesting to see this week how much of that upside we've been talking about a lot, the really, really outlandish upside, the 45, 50 handle and above stuff is persisting out there. I guess we'll find out. Number 9, 203,000 of our old friends, the March 47 halves. So there we go. Still hanging out. Number 8, 206,000 of our first of 3 puts in the top 10 this week, the Nov 16 puts. Number 7, right back to the upside we go, 211,000 of the Jan 45s. If that doesn't do it for you, like it a little bit closer to home, allow me to present number 6, 231,000 of the D's 45s. Number 5, 235,000 of the Jan 47 halves. So, when the 45 strike just won't cut it, the 47 halves are there for you listeners at number 5. Number 4, 238,000 of our second of 3 puts, the Nov 15 puts. And number 3, our third and final put in our top 10 this week, 269,000 of the Nov 17 puts. Then we're back to our top 2 yet again, 322,000 of the D's 40s and the number 1 size position still this week in VIX options. The now seemingly far more distant D's 35s, 332,000 of those open out there. So not perhaps the big shakeup in the top 10 that you may have expected coming into today, unless you count one more put eking its way into the top 10, a big shakeup. Let's see what we had on the tape out there this week. Again, it was a Fed week, so you never know what you're going to get. You're going to get the 1 million plus days. You're going to get maybe people sitting earlier in the week and keeping their powder dry, and so some light volume. You can get a mixed bag in Fed week. And this week was an interesting one. Today, like we said, looking decent so far. 677,000 contracts on the tape. The top 5 today, number 1, 55,000 of the Nov 14 puts. So there you go. There's your puts, listeners. Number 2, 50,000 exactly of the Feb 45. So we're right back to the upside again. Number 3, 42,000 of the Nov 15 puts. Number 4, 31,000 of the Nov 17 puts. And rounding out the top 5 today, surprise, surprise, 25,000 of the December 17 puts. So getting some put action today, which you would hope. Yesterday, a little bit more action, 718,000 contracts on the tape. The big dog yesterday, 52,000 of the Nov 16 puts. Bit of a put palooza yesterday, which is kind of what you would expect in this environment. Number 2, 46,000 of the Nov 17 puts. Number 3, 44,000 of the Nov 15 puts. But breaking it up, not all puts all the time. Number 4, 37,000 of the November 25 calls. And then number 5 yesterday, 34,000 of the Nov 19 puts. Wednesday, of course, was an interesting day. A lot of people waiting for the news to break. So 587,000 contracts on the tape. Obviously, we've seen more active Fed days in the past. So interesting to see how these numbers unfold during these weeks. The big dog on Wednesday, such as it was, 33,000 of the D's 27s, followed by number 2, 32,000 of the Nov 17 puts. So that one's popping in there again. Number 3, 23,000 of the Nov 16 puts. Number 4, 22,000 of the November 20 calls. And rounding out the top 5 on a decently active Fed day, but nothing to write home about, 20,000 pretty much exactly of the December 32 calls. So interesting strike selection there. Tuesday, 787,000. So Tuesday, at least so far, taking the big dog day on the week, but today obviously not done yet. 787,000 contracts on the tape on Tuesday. The big dog, nearly 80,000 of the Nov 47 halves. So maybe some folks adding on, thinking that we're going to get some dire news coming out of the Fed. Interesting stuff. Number 2, 59,000 of the Nov 17 puts. So right behind it, you got both directions lighting it up there, listeners. Number 3, 52,000 of the Feb 45 calls. So right back to the upside again. Number 4, 50,000 exactly of the Nov 25s. And rounding out the top 5 on Tuesday, heading into the Fed, 30,000 of the November 40s. Monday, another day, kind of treading water, decent volume, but not explosive. 645,000 it was your total on Monday. The big dog actually pretty active, almost 100,000, 93,000 of the April 60s. Don't see a ton of April popping in, but on Monday we did the 60s, 6-0s. You like that strike, listeners? Does that intrigue you? Intrigue someone to the tune of nearly 100,000 on Monday, followed by number 2, 43,000 of the November 45 calls. Number 3, 33,000 of the April 35. So maybe we have the old 1x3 lighting it up. I'll have to go dig, but 33 versus 90,000 plus, it does kind of line up in that direction. So Interesting. Are we back in the old ratio vertical time in VIX, listeners? Number 4, 30,000 of the no 47 halves. And rounding out the top 5 on Monday, kicking off Fed Week, 25,000 of the November 25s. Scott, I know you watch the VIX futures. I know you also pay tangential attention to the VIX options, probably a little bit closer during Fed Week. An intriguing week, not perhaps the volume explosion we've come to expect from a Powell week, but a decently steady week all the same. Anything catching your eye out there in the world of VIX options this week, sir?
I don't think we should be surprised at the volume, despite the fact that it's a Fed week, it was just absolutely locked in that they weren't going to do anything. I think that if there was a surprise, it's that they're now, well, I guess relatively dovish, I guess you'd have to say, given how the market has responded. So no, I don't think you can be too surprised. Again, they did exactly what was expected, which was nothing. I think that the fact that we see so much put volume is interesting. I noticed some interesting trades today. Somebody sold a bunch of the DEES 13 puts. So they think it's done. They think it's done. Another trader who thinks that that ball is done, that we're done for the rest of the year, that we're not going to get very far from where we're at right now in the VIX, which is 15, just over 15. So I think the fact that this year VIX has seen lower highs is interesting, but also the fact that we've tended to bounce off the 13 level all year. And I think people are now kind of targeting that level. So interesting, but I'm not certain selling 2,300 of the DEES 13 puts at 9 cents this morning makes that much sense.
That doesn't excite you?
Nah, tough to get rich that way.
Yeah, it's an intriguing choice in and of itself. Speaking of intriguing, I was digging into the paper on Monday. Listen, it's kind of hard to tell. This went up 1 by 3 this April, 35.60. The volume lines up, but also a whole bunch of NOVE went up at the exact same time with it. So it's kind of hard to parse exactly what they were up to here. It wasn't just the April 1 by 3, as much as it looks nice and lines up that way from our top 5 perspective. I'll have to dig a little more to see exactly what they were up to. But Mr. Rock Lobster, same question for you, sir. Anything catching your eye in a decently active but not blowing the doors off week in VIX options, sir?
I think actually mostly it was the lack of action. There wasn't, you would think there would be a little bit more November put action. Today there is a lot. And I have to say, I'm looking at it right now, you look at the November 14 puts for 9 cents, or the 15 puts for 30 cents, 17 puts for $1.38. All of that stuff is looking a little more cheap. We're in the Russell rubric now, and there's actually some future value we're not quite a week yet. We're 10 days out, but VIX becomes a lot more interesting in the short term here as a trade. So I would say, that there is some volume here in November, buying all this stuff. Also, the back spread opportunity now. I guess what Scott was just saying, I like the idea of buying the DEES, the DEES 14 put or the DEES 15 put in VIX, but then you lever by either buying long VXX, long VIX future, or long VIX in the money call against it, because now things look much more interesting. So you do the December 2014 and a half calls or 15 calls. You buy one call and buy 5 puts of the 15. You could probably lever up as much as 10 to 1. If you bought the 14 call puts for 28 cents, I would buy one of the 14 calls for $3.25. So you've got a lot of interesting levering possibilities. I just don't go buy the puts and just expect everything to be hunky-dory, and you just collect your huge paycheck at the end of the month on your VIX puts. There's usually a little bit of, let's just call it sadness and woe, I think would be the correct term in the meantime. But just saying, with VVIX now just almost ready to break 80, that's when I like levering these. And if nothing really happens, all of a sudden the puts start to spring to life again. So very interesting opportunity here. Again, but even though VIX is only 1537, if this rally is real and everybody gets happy, VIX is 13, and then your puts basically double, and you have calls for credits. And if you have a surprise, then you make the big dough for the month. So a lot of interesting ways to trade the products. Oh, wow, I got a fill. A lot of interesting ways to trade products when the levels are like this.
A lot of interesting things indeed, including a lot of interesting things out here in the land of the vol ETPs. And man, what a what a week this one was. SVIX, our inverse friend listeners, up 5.5 points from where it was this time last week. Of course, as VIX gets crushed, SVIX likes to pop out there. Again, doing decent paper today, 3,100 contracts. Doesn't sound like a lot, but when you see the ADV is only 4,700, it's actually a little bit more respectable. It was trending in the right direction this week, coming back down about 400 contracts a day. So not a ton lighting it up out there in SVIX land. The top position out there, 4,428 of the November 28 calls. That's the big dog. We had our buddy, Mr. Chris, on the show last week talking about how he was the owner of the much ballyhooed, much discussed, very controversial SEP 35s in SVIX that almost paid off, as ridiculous as they were. He talked about a little bit of his reasoning behind that one. If you want to see why they bought those, check out the show last week if you missed it, listeners. But let's talk about the elephant in the room. A little bit smaller elephant, or I should say a lot smaller elephant this week. This is just the monstrosity that is UVIX. My goodness, what a beast. That's the only way you could describe this. What a beast this thing is. It's at a 27 right now. It was much lower even earlier today, 26 and about a third. That puts it down right now, listeners, about 16 handles from where it was this time last. Yeah, it was about a 43 on the show last week. Oh, my goodness. That one, that's painful, Mr. Rocklops. That's painful. I'll get into all the saga of that one on options oddities a little bit later. But that one, it's the worst when you're right, but somehow still wrong. 7,800 contracts on the tape today. So a decent amount of paper going up out there today, especially when you're seeing the ADV surprisingly moving in the wrong direction as well. 11,000 contracts a day now. That's down about 3,000. Scott, I know you watch the universe of the vol ETPs. After all, you've created a product or two in this space over the years. Have you been following this saga of the reverse split of UVIX 10 for 1? A lot of people, myself included, thought that wasn't enough. They wanted a 40 handle in UVIX, and then the market delivered that to us, and I don't know if any of us were ready for the resulting chaos, sir. Scott, have you been watching this thing over the past couple of weeks?
I have been a little bit, and you're right. We got a 40 handle, but if you blinked, you missed it. These products are interesting, but they are absolutely tactical. You can't use them all the time. They're not investments. You shouldn't have them on all the time, particularly something that is, first of all, anything that's long VIX futures, that over time it's going to disappear. It just the roll cost is going to whittle it away, and doubly so when it's 2x long. And so you have to use these sparingly and tactically, and you have to be quick to take profits, which is really goes against the grain of everything every trader's ever been taught or told. They're not going to go to 1 million, and they're just not going to get there. And we do know that over time, absent a bunch of reverse splits, they are going to go to zero. So use them carefully. They're fun to watch. Maybe the best thing to do is just watch these things go.
It is certainly going the way of the dodo this week. Mr. Rocklops, I know you're a little bit happier. You were lamenting last week that I think your 25 puts were going the way of the dodo. Now this morning they were almost at the money. So quite the reversal for you. I mentioned when they filled me on that put fly, I kind of thought it was going to be a bit of a Roach Motel trade. I was surprised to get into it. I thought it might be hard to get out. That did indeed prove to be the case. So I will address all of that, the sordid details of that, because we're coming up against it a little bit later on options oddities, listeners. But my goodness, what a vol annihilation. What an opportunity if you were on the right end of it. Mr. Rock Lobster, what caught your eye in this just complete destruction of UVIX this week, sir?
What, 40 to 25? No, 44 to, it was 44 to 24, I believe.
The high was 44
to 26.50 or something.
Yes. Just, I mean, insane.
Mostly what I've noticed is it has stopped cold. The liquidity provider is saying no mas.
I did notice that. It just bounced
Roberto Duran, if anybody remembers that from 1978, right? The no mas fight. So I put this out to my students. VIX is down, but volatility at the strike is not moving a lot. It's very hard when you have basically a 5.5 or 6% move in the underlying in a week, and the volatility at the money, at least the volatility at the money yesterday, I think in the December cycle was probably 14 in SPX. So while you see a lot of indicators saying the vol is down, like the 4400s for the December 4 cycle today, let's take a lookie. The implied vols are kind of holding steady. Today is the 3rd. I'm seeing a 1224 vol, and they were 1222 yesterday. So actually vol just out of the money in SPX is slightly up today on per strike. So, what I would say is you look at that and you go, okay, that's something that is awesome. But even though VIX is down fractionally, the market is not letting the vol go down anymore. And which is usually a little kind of as much as I want to hold my UVIX puts to get them back to $2.50 or $2.25, what I paid for them, they're almost back there now.
I think we need $2.25 for those?
Not doing
okay.
Much.
I didn't realize you paid $2.25 for those. Okay.
Oh no, I paid $2.25 for them, and then I did own some SPY put spreads against it, but of course I sold them all too early when I did the big swap. I sold all my SPY put spreads and bought VIX call spreads, but we could talk about that on oddities.
We'll regale our pain.
I think later. I left about a gajillion dollars on the table, but it's okay.
You and me both, kid. As we keep on rolling, we'll come up against. I want to get really quickly though before Crystal Ball. I want to get Scott's thoughts on some of our polls. So really quick into the volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail. You folks have questions. We have some detailed ones about dispersion. I'm not sure if we're going to have time to get into those, but I do want to touch on one of these really quickly that I know Scott will have some thoughts on. Really quickly, let's pay off some of our ones on this. We had some fun ones. It was Halloween week, after all, listeners. So we had a fun flash poll earlier this week around our Advisors Options show, where we just asked you quite simply, what do you think is the scariest sounding volatility, I should say, options strategy? Gave you 3 choices and the infamous other. You guys wrote in some fun others, where we gave you Iron Condor, Iron Butterfly, and, of course, the Strangle. And the Strangle won by a landslide, somewhere around 60-odd%. I get you. It sounds pretty off-putting when you first hear about it out there. But, Scott, the one I wanted to get your thoughts on was our question of the week from last week. This one, we were still talking about it on the show last week. It was just about to finish up. We now have the results. We asked last week, so we got more data under our belts about zero DTE options, so it's time to revisit a question we asked you earlier in the year. Quite simply, do zero DTE options increase intraday volatility? Heck yes, heck no, or I still need more data. And Scott, the results are now in. Our audience, as we all know, the ultimate arbiter of all things volatility, they decided heck yes, 63%, heck no, 29.6%, and 7.4% saying they still need more data. Scott, I know probably among us, and perhaps among all of our network contributors, you are the biggest fan by far of all things zero-day. So what are your thoughts on the results of our poll? And do you agree with our audience? Do you think zero-day is increasing volatility or not, sir?
I'm not certain I'm the world's biggest fan of zero DTE options. To the degree that they're used for gambling, then they're a bad thing. Are they increasing intraday volatility? Almost certainly. It could be worse. As long as speculators are buying them, that generally leaves institutional investors, market makers short them. They have to hedge all that away. They hedge that by, going into the underlying market. So they certainly increase intraday volatility. It could be a lot worse, though. Could be a lot worse. I am not a fan of speculating using zero DTE options. People think they can do it because it's fun and relatively cheap. And that strikes me as an alternative to spicy food or roller coasters or horror movies or whatever, and a pretty poor alternative because they can get pretty expensive over time.
They can indeed. Let's see how expensive or perhaps cheap volatility is this week, listeners, because it's time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, listeners, welcome to the crystal ball. And I won't bury the lead here, listeners. None of us had a 15 handle on our crystal ball last week. It was myself, it was Mr. Meatball and Chris Sidial, and all of us were thinking the Fed would add a little bit more juice and it would just survive and last. That's the question, right? Will it last all the way through to the end of the week till vol views? I certainly thought that it would. I thought we'd be a little bit higher. I was stretching a bit. I admitted that on the show last week, but I said 23 and a quarter. Obviously, nowhere close to that. Mr. Meatball, doing his palindromic nonsense, was at a 22-22. No joy there. And Chris was at a 21 even. All of us now, in hindsight, wildly optimistic with our upside. So what a week, what a couple of weeks for me on the crystal ball, because I had an exact bullseye. It was stunning. And then come to this week and I'm off by 8 points. So that just shows you vol can give and vol can taketh away. So Scott, the good news for you, sir, or maybe the bad news, is that because you weren't on the show last week and you didn't get to lose, you get the dubious honor of going first, sir. What are you feeling for VIX? And if you want to pick any other indices as well, have at it for this time next week, sir.
I'm gonna VIX at 16 and Voldex, ticker symbol VOLI, which is our measure of precisely at the money implied volatility. Again, ticker symbol VOLI, VOLI. Nation's Voldex is going to be at 14. So it's interesting. Yeah, I think they're both going to rally. I think we're going to see a short-term bottom here in vol.
Interesting. That's whoever hit that bid on the D's puts, the D's 13 puts, that got you firmly in the upside camp now. That's it. That's too much. A little bit of a bounce here. I can see that. Mr. Rock Lobster, I'll be charitable to you. Would you like to go next or last, sir?
I will go next.
Okay, have at it.
This is a weird one. I think if anything, we are only marginally lower. So we're trading around, I would say 15 and a half, 14.50 next week, right to the 30-day realized vol in SPX before it kisses it and pops back up. And then I think Scott will be right. We'll probably head back up again when everybody realizes maybe this isn't the time just to rally hope, but I think we see that.
Yeah, I was feeling a little bit juicier than we are right now, but not much. I don't want to crowd Scott too much on his 16 handle, but I was feeling close to that range, so I'll dial mine back a little bit to give him some wiggle room. So I will say, let's say this time next week, I'm going to say a 15.75. So there you go. Scott gets all 16 and above. I get a little bit of room there. I get 15 and 3/4, and Andrew gets all the downside of 14.5 and below. What are your prognostications? By the way, looking at a lot of our listener guesses, our producers surfaced the closest ones, and they're not close. A lot of 20-plus handles out there. So I didn't see any 15 handles in the listener guesses. Our producers will go through it all, listeners. If you somehow sent in a magical 15.35, then we will certainly send your fabulous prizes your way. All right, hard to believe an hour has flown by. Man, time flies when you're talking all things volatility. For all of you on-demand folks, that will conclude our broadcast week with you. I want to thank you for joining us throughout the week. Remember, if you missed anything, it's all available on the network feed. So if you're just listening to Vol Views, upgrade to the full network. It's all there waiting for you. A lot of shows. 17 years almost of shows now coming at you on that feed. And then, of course, if you don't want your broadcast week to end, you want to come back and hear the saga of UVIX and everything else that went wrong this week, then only one place to go, theoptionsinsider.com/pro. Hit that join button. That'll get you in for Options Oddities coming up a little bit after this show. It'll also get you 250 plus episodes that have gone up on that exclusive podcast feed over the last couple of years. Of course, get your name in the hat for all of our giveaways, give you access to the live so you can heckle all of our co-hosts live and all sorts of other fun over there. Theoptionsinsider.com/pro, the place to go to keep the party going after Vol Views. And Scott, if folks want to keep their party going in the land of nations, maybe check out a product or check out a book, where should they go? What should they do, sir?
There are a couple of things they can do. They can, if you want to learn about my books, you can go to my website, scottnations.com. If you want to learn about some of our indexes, you can go to nations.com. And lots of good stuff about the business and our indexes there, or follow me on Twitter @ScottNations.
I know you have a new book in the offing. Can you leave us with a hint or tease of what you're working on?
No. Way too early.
Too early?
I have a concept for a new book. We'll see.
Okay.
We'll see if it gets written.
You got to get into that Hemingway writer's room and crank it out. I see.
There you go. Proud to be the Ernest Hemingway Birthplace and Museum writer in residence.
There we go. I'll have to come check that out one of these days. In the meantime, check him out. Ladies and gentlemen, easy to find over there. Search for his books as well, Scott Nations, Nations, on Amazon or wherever else you find your favorite books. A lot of great stuff to check out there. And Mr. Andrew, sir, where should folks go if they want to see how they should not trade vol this week, sir?
Yes, if they did not trade vol this week. Actually, it was last week. I think that was the week. OptionPit.com. Check us out. As much as I gripe, all my products make money for my students and generally pay for the subscription services. So if you want to check out, watch a guy actually trading live and taking the positions on and off and seeing how to do it, come on over to Option Pit and put your learning on.
Put your learning on over there, optionpit.com. Like we said, that's going to do it for us on the on-demand side today. Back again in a little bit for Options Oddities for all your pro folks. For the rest of you, we'll be back again on Monday with the option block all the way through to next Friday, another episode of Volatility Views. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.